is another Thank God Friday to the weekend, everyone. I am Melissa Enoch here at the NGX Trading Floor in Lagos.
And I'm Grace Egbaragu. It's the 19th of June. We hope you had a great week so far.
Let's now tee off with news now. Cameroon state-owned mining company Sona Mines recorded its first ever profit since its creation in 2020, reporting a net profit of 724.7 million CFA francs for the 2025 financial year. The result marks a turnaround for the National Mining Corporation, which was established to strengthen state participation in the mining sector and improve oversight of mineral production. Sona Mines said the performance reflects progress in advancing Cameroon's mining sovereignty agenda, including greater control, traceability, and protection of state interests in the sector. In South Africa, Johannesburg is hosting the 2025 Annual Investment Roadshow, bringing together government, business leaders, and investors to explore opportunities for growth. The roadshow focuses on attracting capital, supporting economic recovery, and strengthening South Africa's investment pipeline. Let's listen.
So I thought I should introduce those issues as part of the discussions. And today we'll then have inputs coming from our administration, specifically on matters around finance, on matters around investments, matters around our budget and how to intend investing in our infrastructure programs, which is an important part of the discussion. Because if our infrastructure is not responding to the current developmental needs, then there's a big challenge. And Johannesburg is ready to respond on how we're investing in our infrastructure. So I thought I should introduce those issues, and I hope the discussions that we'll undertake today will help us navigate the challenges that we have and provide solutions on what we are doing. Yes, the Auditor General has given us a qualified report on our core departments, and we'll explain why are we at qualified. But for group, we are now sitting at an unqualified report. And the reports and the presentations that will be done by the administration will demonstrate what are we doing also to get ourselves out of a qualified report, especially for core departments, and how are we going to be strengthening our entities that constitute the city of Johannesburg, who at least at this stage, they've received a unqualified report. So those audit reports we think are important for us to engage with you, including matters around rating agencies and how they've responded currently to our situation in Johannesburg. So administrators will be able to touch on those issues.
In other news, the International Islamic Trade Finance Corporation and the government of Côte d'Ivoire have signed a $750 million framework agreement to support the country's National Development Plan 2026 to 2030. The facility will help strengthen strategic economic sectors, expand trade finance, and promote private sector-led growth as Côte d'Ivoire advances its long-term development agenda. The new agreement is 3 times larger than the $250 million framework signed in 2023, underscoring the growing partnership between ITFC and Côte d'Ivoire. Meanwhile, the federal government of Nigeria has flagged off the expanded Nigeria, East and Southern Africa air cargo corridor in partnership with Rwanda. The initiative is expected to boost intra-African trade, regional connectivity, and AfCFTA implementation, while improving market access for Nigerian exporters. Here are excerpts.
1 year ago, on Africa Day 2025, which is the 25th of May, we launched the Nigeria East and Southern Africa Air Cargo Corridor to solve a real problem for Nigerian businesses. Our exporters had quality products, they had ambition, they had market opportunities across Africa, but too often the cost of moving goods across our own continent was too high, too unpredictable, and too slow. For many businesses, especially MSMEs, logistics costs of $3 to as high as $10 per kilogram meant that Nigerian products became uncompetitive before they even reached destination markets. under the leadership of His Excellency President Bola Ahmed Tinubu, GCFR, and in line with the renewed Hope agenda, we made a commitment that AFCFTA must work in practice, not only as policy, not only as protocol, but as real market access for real Nigerian businesses. And that is why this flag-off matters. With Rwanda joining the corridor, we are widening access, opening new routes, and giving Nigerian exporters more options. Nigerian businesses can now move goods to Kigali, Harare, and Lusaka, while also having additional carrier options to Nairobi and Johannesburg. Through this Rwanda partnership, cargo rates across the 5 destinations are now under $2 per kilogram. And this is significant. Yes. For a fashion, you can hear the noise from that side where the businesses are. It's significant because for a fashion brand, a processed food exporter, a cosmetic producer, an agro-processor, a leather goods manufacturer, or a light manufacturer, this can determine whether their products enter a market competitively or lose the opportunity at the point of logistics.
Finally, on News Now for this Friday, Airtel Money and KCB Bank have launched a partnership allowing Airtel Money users to deposit and withdraw cash at over 22,000 KCB agents across Kenya. Deposits will be free while standard withdrawal charges apply, and customers must have a valid ID and registered Airtel Money account. The deal expands financial interoperability and extends Airtel Money's reach through KCB's widespread agent banking network. I am Melissa Enoch, and that's it on News Now this Friday. The show returns shortly with Grace giving us our market updates.
The Monetary Policy Committee of the bank decided to raise the repo rate to 6.75%. Now, I will be elaborating on the factors that we have looked at for us to be able to arrive to that decision. I will be looking at recent economic developments, starting with the global and regional, and going to the domestic, and finally, the monetary policy stance by giving you a motivation why we have really come to such a decision. The global economic uncertainty has remained elevated since the previous MPC meeting, despite rising optimism that peace will be restored in the Middle East. Trends in key commodity prices were mixed since the last MPC meeting. Monitored stock markets have rallied most recently, while bond yields remain elevated. Inflation rose significantly across most monitored economies, with some key central banks tightening their monetary policy rates.
Welcome back to Money Moves. Thanks for staying with us. Let's now go over to Grace for reports on how the markets wrapped up this Friday. Hello there again, Grace.
Thank you, Melissa. Let's now take a look at how the markets wrapped up trading for the week, starting off with the equities. The NGX All Share Index slipped 0.39%, while the BRVM in Abidjan gained 1.25% to 444.18. The Nairobi Securities Exchange rose 1.47% to 217.57. In the South, the Johannesburg Stock Exchange dropped 1.59%, while Mauritius Semdex edged up 0.03%, and Zimbabwe ZSE declined 0.67% to 400.04. In North Africa, Morocco's MASI slipped 0.63% as at 13:51 GMT. Finally, let's take a look at the energy commodities. Brent crude rose 0.31% to $80.10, while natural gas fell 1.42%. US WTI gained 0.56%, and RBOB gasoline slipped 0.37% to $2.98 as at 12:40 GMT. And that's our Money Moves market today. Back to you, Melissa.
And that's it on today's edition of Money Moves. From all of us here at the NGX Trading Floor in Lagos, we say thank you very much for watching and bye for now.